Hey everyone, welcome to Alpha Insights. I'm Archer.
And I'm Allison. Great to have you with us today. And hey, if you have questions while you're listening, drop them at stockalpha.ai.
Today we're digging into ARK's Innovation ETF, the one that chases disruptive names across AI, genomics, robotics, fintech. Lots of high conviction bets.
Yeah, that's a good point. The fund's very concentrated and actively managed, so when the thesis works, it can really compound. But when things wobble, it swings a lot.
Quick snapshot. The ETF is trading around $69.05, and analysts note its beta sits roughly around 2, which tells you right away this is higher volatility territory.
So the real question here is how much of that volatility is opportunity versus risk?
Exactly. ARK's edge is a public, research-driven process and the willingness to hold big, concentrated positions in names they expect to disrupt industries. That can deliver outsized returns in the right regime.
But the flip side is liquidity and flows matter hugely. This fund's moves are driven by what its top holdings do, and by weekly inflows or outflows that can force rebalance trades.
Recent reports say the manager has been rotating into medical AI and trimming some of the big social or ad platform names.
Right, and that rotation is notable because medical AI is a theme that could actually change earnings paths for those companies. So if earnings accelerate, it could help a re-rate.
On the macro side, headlines around tensions in the Hormuz region and oil volatility have been floating around. And when geopolitical risk spikes, money tends to flow out of high beta strategies like this.
Yeah, flows are the hidden risk here. If investors rush for the exits, the fund might have to trim positions at bad prices, which amplifies losses.
Let's talk technicals for a moment. Momentum indicators and a cluster of moving averages are more in the sell or neutral camp than the buy camp, so the chart isn't confirming a steady uptrend.
Analysts point out the ETF is about 25% below its high from last year, and there's technical resistance around $75, with support near $60.
Important to remember, an ETF doesn't have earnings the way a company does. ARK's performance is NAV movement from its holdings. So the catalysts to watch are earnings from the top underlying companies, the fund's own disclosed trades, and weekly AUM and flow reports.
I mean, when you look at the data, scenario analysis makes more sense than a single price target. If core holdings re-rate thanks to accelerating revenue, the upside could be large.
That's the bull case. Faster monetization of AI and medical AI, continued retail interest, and ARK's agility to jump into breakout names earlier than passive ETFs. Some analysts sketch a scenario toward about $100 if things line up.
And the bear case is pretty straightforward. If growth multiples compress, or if macro shocks and higher rates choke liquidity, you could see big drawdowns. Some scenarios put downside toward $45.
So, risk management matters. Data suggests watching daily flows and AUM as early warning signals and monitoring the manager's tilt between AI, medical AI, and more traditional ad-driven winners.
Analysts discuss possible approaches: phased exposure, strict sizing to avoid concentration, or defined entry and exit rules for shorter-term traders. We're not telling anyone what to do, just sharing the ways the market is thinking about it.
Exactly. This is informational. Keep in mind the technicals are mixed. The fund's inherently more sensitive to market sentiment because of its beta, and industry coverage for active ETFs tends to emphasize flows and manager trades over classic earnings models.
Honestly, I was a bit surprised by how quickly themes like medical AI moved from niche reporting into a sizable portion of ARK's recent buys. It's a clear sign the manager is rotating themes.
Right, to wrap up, let's run through the key takeaways.
Analysts note: 1. ARK's Innovation ETF offers concentrated exposure to disruptive innovation, which brings both upside potential and above-market volatility.
2. Watch manager positioning and weekly flows closely. They materially affect execution costs and NAV moves.
3. The technical backdrop is cautious, so momentum indicators aren't confirming a durable uptrend right now.
Good summary. And before we go, got questions? We'd love to hear them. Head over to stockalpha.ai where you can ask us anything and we'll answer live. And while you're there, Check out more market content and our Q&A feature.
Thanks for listening. We'll be back with more alpha insights. Stay curious and keep an eye on those flows.